Good morning, Wall Street winners. It is Monday, September the 30th, and as we head into the end of September today, we are heading into a week with some muted activity. Friday probably being the most important day when we get the jobs report, which will help determine what the US Fed, the Federal Reserve, does with interest rates in its next cut and the size of what that cut it will look like, which is the key discussion point right now heading into Friday. We do have some earnings coming up this week, and we do have some other things on the go that I'll touch upon in just a minute. Hey, if you're liking these videos, please consider liking the video and subscribing to the channel. I release these daily and really just doing this to help educate others on the status of the market, and hopefully that's beneficial to you. So as we look at the Bloomberg app here, we can see that all three US indices are in the red. Not a huge amount, third of a point, quarter of a point, something like that, tenth of a point, depending on the indice. But we are into the red going into the morning session, as we can see here. What we'll want to note this week, if we flip over to the Yahoo Finance app, is we do have some earnings coming out. One of those in our health and retail is Nike. And we've seen that Nike has been on a bit of a run lately. It's climbed from the high 70s up to the very high 80s, likely to cross over into the 90s as we head into earnings. But earnings with Nike are always a bit of a mixed bag. Over the last 9 quarters, Nike has had some rather poor earnings with small different moves that have happened. There is an expectation that the average move this earnings season for Nike will be in the 5 to 6% range. So about $5, call it, to the upside or the downside, depending on how the earnings come out. And we've just had an announcement last week about a new CEO starting shortly, coming up in October in the next couple of weeks. I believe that individual starts on Monday, the 14th of October. So that should help with this next quarter, but it's not going to do anything for the past quarter. So this will be an interesting indicator to see what's going on around Nike. I would be a little hesitant to be putting money into Nike right now going into earnings. I'm going to call this a wait and see. What I would be more likely to do and have done is I bought a call option which has an expiry of March 25th into 2025 that is at $95. So I believe that Nike will get to 95 by the end of March of next year. And that's based on the new CEO, which I didn't know about when I bought the call option. That hadn't been announced. And based on the holiday season coming up and spending on Nike and Nike shoes and apparel. So that's where we are there. You can see Costco at the top. It got hit last week. I think you're going to start to see it recover. This was a $891 stock when it closed, and then it fell down into the low 880s. The earnings report was not that bad. Future forecast was off slightly, but it doesn't mean that it can't be beat. And if it does beat in the next quarter, Costco should go higher. And I think with everything going for Costco, I mean, if you ever go to a Costco, I was at one on the weekend, they are packed with people, and it's hard to get out without spending in the multiple hundreds of dollars at Costco. So it's a great model, super efficient. They have amazing relationships with their vendors. This would be a retailer that will not likely be as affected by the shipping strikes going on the eastern seaboard of the United States, really of North America, with Montreal potentially going on strike at midnight tonight as well as the East Coast location. So I think you're in good shape looking at Costco at that price point. Scrolling down through the list, Walmart under 80, I would hold off a little bit and wait for that to drop into the 76 range if I were going to buy some of that. Home Depot has been making a bit of a quiet recovery behind the scenes. I like Alimentation Couche-Tard. So ATD, that Canadian company out of Quebec that's got the offer in to buy the 7-Eleven chains, it's dropped down into the mid 75 range. I think it's a bit of a bargain in the mid 75 range. So if you are looking for a retailer, that would be one that I would definitely take a look at. You can see it pays about 1% in a dividend, so it's not a huge dividend. The price earnings isn't off the charts and ridiculous, and I think it's got a lot of potential upside there. As we move down, you can see the transport group. So I think transport's going to get hit today because of this pending strike. If the strike happens at the ports, that's going to have a ripple effect down the line with transportation, and I could see them taking a hit. I'm waiting for CNR to drop down into the low 150s, if not the high 140s, and we'll pick some up at that point. I think that would be a strong purchase in the 148 range, with the price earnings dropping if it gets down to that, and a 2.15% dividend yield. Going down into oil, there has been a big disconnect between oil stocks and what is going on with oil around the world with all the conflicts. And crude is up slightly today, only 2 cents right now. It has broken above the $68 range. I think we're going to see crude get back into the high 70s, if not low 80 range by December of this year, by the end of this calendar year. And if that happens, it should lift all of these oil stocks. Now, we do have a lot of these oil stocks starting to report earnings in October. So as we leave September today and get into October tomorrow, we will start to see Valero, as an example, report on October 24th. We have CVX, which is Chevron. Chevron's set to report that last week of October as well. Exxon also reporting in the last week of October. So there is going to be a lot of potential momentum around these, and I would expect that oil stocks will start to increase towards their earnings release timeframes. Now we get into tech. Tech has had a great run. Looks like we're in a bit of a pullback situation today to start the day. That doesn't mean we're going to end the day or the week in this pullback situation, but it is interesting to watch what's pulling back. So Micron looks like it's off a bit today, $1.50. We've got CRM down $2. A lot of red on the screen in the tech area. If we look at just some standouts here as we scroll down through the list, AMD off $2.25. Lam Research off 7.5, but still up at 827. Again, I think this stock is going to be $950 to $1,100 stock by the end of the year, Lam Research. So it's an attractive price to get in. Tesla had a great week last week. Some announcements in the next couple of weeks coming out of Tesla. So those will be interesting, especially around their self-driving automation. And that's been climbing steadily. Meta has been an amazing stock. This is one we predicted would go to 550 by mid-October. It hit 550 by, call it, mid to late September, and it continues to climb. BABA had a good run. It's up 550 again in the pre-market. That's pretty outstanding. So again, that Chinese stimulus has had a very positive effect on some of these Chinese tech companies and other Chinese stocks. We've got NVIDIA off about $3 pre-market. I think that's going to come back. And Google only off 33 cents. So I think Google is still on a climb and upward trajectory based on its pullback when all tech pulled back over a month ago. It never really recovered to the same extent that some of the others did. And I think it's got a lot more runway left in it. That would be a stock that I would look to pick up today. A TSM off almost $5. That would be another one. This is a great stock. Back, it was up in the mid 180s, 185, 184 range last week. I think it'll get back up there this week. And so on a pullback down to 172, 173 today, probably a good opportunity to pick some of that up. You've got SoFi as we scroll into financials, still under $8. Looks like it's down 10 cents in the pre-market. That could be an interesting acquisition. But scrolling down lower, you've also got your JP Morgan, which will be the first to announce in the next in 11 days. So you can see that it's pulled back almost $2.50. So that's a percent, a little more than a percent there in a drop. They announce on the 11th of October, and I'm assuming that those announcements, the earnings, revenue, and future forecasts will be very positive for JP Morgan. So that would be one that if that does drop into the low 200s, I would definitely look at picking up prior to earnings. I would expect that maybe not this week, but next week, leading into earnings, starting on Monday, leading into Thursday and Friday earnings, that JP Morgan will start to climb slowly through the week in anticipation of what those earnings are. So now might be an interesting time on a pullback to acquire some of that. And then shortly after JP Morgan the following week, we've got Morgan Stanley and Goldman announcing, as well as obviously a number of others. But those would be stocks that as they pull back, I would look at putting some of those into the portfolio for a small percentage gain in the next couple of weeks. So that's where we are today. We've got Nike reporting on October 1st this week. We've got Lamb Weston Holdings on the 1st. Paychex comes out on the 1st. That could be an interesting one as well. Paychex is a pretty strong company. Potential movement there of about $7 to $8 in the stock is anticipated on a positive earnings announcement. On October 2nd, we have ConAgra Brands reporting. On the 3rd, we have Constellation Brands reporting. And that's where we are today with the market. So good luck in your trades. And if you're liking these videos, please hit the like and subscribe button and let me know what you'd like me to talk about.